let's head to the crypto space now. Remember that conversation with the BDCs, Larry?
Right.
You are now a corporate. You and your crypto people. You're the cause. Yes, traders. You're the cause of dollar shortage in Nigeria.
Yeah.
So says the BDCs in Abuja. Right. It's not me.
Trying to understand how that works.
I don't know.
But I guess it's because of the amount of liquidity we see in that P2P market is quite incredible.
Yes, it is. But I mean, does it affect the supply in Nigeria?
Because I'm wondering how it affects
the
BDC, because at the end of the day, the BDC needs supply. Because they did say they don't have supply.
And they need physical supply.
Exactly. But, we see how the crypto market works. It's quick.
You have been served.
So fast. Yeah.
You have been served.
Exactly.
That's all I know.
Yeah. P2P market being blamed at this point. All right, let's look at the headlines there, where we see the Association of Bureau de Change Operators in Abuja. The chapter there, they've closed indefinitely from today, the 1st of February. They claim that, right there, you didn't hear any, that the P2P crypto market is actually impacting, their business at this point, and they're not able to get liquidity at this point. So that's why they're closing down that chapter. Let's look at other stories now. We see the U.S. Fed yesterday, as expected, consensus. They held rates for the first FOMC meeting of 2024. But what investors were trying to pick is what's going to happen, going forward when it comes to rate cuts. Everyone's talking about rate cuts in 2024, expecting, the U.S. Fed and other apex bankers are going to dial back on the rate hikes at this point. But it's a hold, and he did say no rate cuts in March 2024, and definitely investors reacting to that. Every investor expecting, a rate cut in March, but he did say there'll be rate cuts at some point, but everything has to be data-driven, for them. If the data doesn't, correlate, then they'll have to keep hiking rates. Let's look at those stories now. El Salvador, they're planning their Bitcoin city. Yeah, the president, Nayib Bukele, announced in November 2021 that his Bitcoin city would boast of everything from residential and commercial areas to, monuments to this currency, that's Bitcoin. So definitely be watching out for how that city is going to look. But definitely we know the president is pro crypto this time. Let's bring in Shehu Dania now, joins us via Zoom from the UK. Great to have you, Shehu.
Hi, good afternoon. It's a pleasure to be here.
Fantastic. So we're seeing the BDC operators in Abuja, that's the Abuja chapter, closing shop, from today. They did blame illiquidity issues, at this point. They're not able to get dollars. And they're also saying the P2P crypto market is impacting their business. Help us break it down.
So, those accusations are unfounded because the thing is, digital currencies only form a very small portion of the overall FX activity in Nigeria. There are larger factors that lead to forex scarcity, oil price volatility. Nigeria is an import-dependent country. So evidently, basic economics of demand and supply will let you know that. And of course, the BDCs do physical cash. They primarily deal in physical cash, and most of the crypto transactions, all crypto transactions are digitally, they happen online. And so there's no competition between, BDCs and the crypto space. However, blaming the crypto for the woes of the BDCs is distracting. We're not facing the underlying issues that creates all these tensions. What it is that the world is going digital, and it's important for us to be able to, use technology and innovate. There's definitely a point for synergy, between BDCs, traditional operators, and digital currency operators. And the truth is the crypto space is embracing, and I kind of like helping with financial inclusion, because a lot of people can, from anywhere they are, it's very convenient. People are able to carry out their transactions as opposed to having to go somewhere. And like right now, Nigeria is a free market. The FX is a free market. Willing buyer, willing seller. So what the crypto market does for people is it allows people to see what they want. Compare that with the traditional BDC, where you have to go out to the person, and then you start asking rates from maybe like 10 different people. Then they can't, you know, they start negotiating back and forth. It's a lot of time wasted. But then there's room for synergy, you know, in how, you know, government needs to be able to come properly regulate both sectors and see how, you know, the BDCs can also use technology to, you know, enhance how their transactions work. If, like we had before, it was simple and it's very simple for the BDC operators, you know, who are licensed to transact money, the forex that they have in their bank account without having to incur heavy rates, heavy charges. So, for instance, now if you're going to make a transaction between your DOM account, between maybe Sean is sending money to Ladi, who is my brother, I'll probably be incurring charges of about 0.5% on us exchanging dollars. And the crypto market is giving maybe very, very significantly less charges on transactions. So those things, everyone has to come back and sit down at the drawing table and look at how we can make all these things work together.
So that means you're saying if the BDC operators take some of their operations online, where you can just, you know, quickly trade most of these currencies, and that could help their business?
Oh, evidently. So first thing, the government needs to understand that the world has changed. Everything is digital. Most things are digital. Most people who trade in FX or who deal with FX, who do business with FX, who want FX, have domiciliary bank accounts. However, it has become extremely difficult for you to do any transactions within the banking sector. That would be the reason why a lot of them would, you know, move to the crypto, to buying crypto. So if the banks, you know, I mean, if the BDCs also speak with the government, and then they also, you know, kind of like find a way with the banks to ensure that, you know, those you can, from your bank app, transfer, you know, FX to your customers. You can buy and sell, do all those things that you want to do. You know, that's where the world is headed. So we need to be able to collaborate and emphasize that it's a joint effort. You know, if they had their ways, there are people who won't touch crypto. I know people who have never used crypto, who still will never use crypto, and, you know, but they trust their banks, they trust the BDCs, they trust the people that they do business with. However, they just need some room for convenience.
Right.
You know, they want to execute a transaction now. They want it as soon as possible. And that is, I think that's those kind of things that the crypto satisfies for people.
Right. And Sean, right now we see that the CBN is, you know, releasing, you know, circulars at this point. They're trying to, you know, halt that, you know, free fall, you know, of the Naira, if you could call it that. But at the end of the day, different activities are making the Naira, you know, weak, you know, at this time. You know, talk to me about the role, you know, crypto can play instead of weakening or adding to weakness, kind of strengthen the Naira also.
So evidently, I've always been an advocate that cryptocurrencies have significantly provided, you know, a lot of succor to the Naira downfall, because there's so much demand for FX in Nigeria, and the FX cannot be gotten from the banks or from the BDCs, as you can obviously see. And a lot of our importers or a lot of other people have then moved to cryptocurrencies, which kind of like is more available. So imagine if we do not have cryptocurrencies available in Nigeria, and all this demand is going through the traditional banking system. I'm sure the value of the Naira would have gone, it would have been worse. So cryptocurrencies can actually hedging for the Naira. Cryptocurrencies can help, however, it still needs to be it needs to be properly regulated. It needs to be properly, the government needs to, you know, right now the government knows that they cannot, you know, take their eye off it. It needs to be properly documented, regulated, you know, understand the players, set guidelines for how the players within that space operate, in order for there not to be chaos. But yeah, cryptocurrencies is helping the country in a significant way. But I mean, however, the government regulations will help the industry to ensure that, you know, the players, the people who are trading in that space, have national interest at heart. And,
all right, you know, but very quickly, before I let you go, definitely we've heard from the U.S. Fed chair that March there's no rate cuts in March, but there could be, you know, rate cuts at some point, you know, in 2024. How are crypto investors taking this?
Right now, most people are looking forward to the Bitcoin halving. The rate cuts, everybody would, you know, kind of like see the direction for that is still a probability. It's not yet cast in stone. So whatever it is, everybody just puts their ears on the ground. If the rates are not cut, people know that yes, it's time to go in harder. Prepare for the halving. People trade more on the ETFs, and
right.
I think it's positive for everybody.
All right. Well, we'll keep watching. Thank you so much, Shehu Dania, CEO, Alpha Gig Technologies. Thank you.
Thank you very much for having me.
All right, so first it was the ETF. The ETF spot approval, that's approved now, that's come and gone. But now it's the halving everyone's looking forward to.
We've been talking about this halving for months. I can't wait for it to come.
Yeah, the halving.
So we'll see where it leads Bitcoin to.
And they always believe it's going to raise the price of Bitcoin at some point. But we'll see.
We'll see.
Never can tell.
Time will tell. Thank you so much, Ladi. So that's